Welcome to Voyage Daily Tech, the most important news personalized for you every day, supported by Voyage.com.
After listening to today's news, you'll know first, Meta's $10 billion Texas AI data center escalates the AI arms race, shifting capital from headcount to massive compute power. We'll analyze why this massive gamble is a turning point for Meta and how it could affect its competition with cloud giants and Wall Street's confidence. Second, Huawei's new AI chip challenges Nvidia's dominance by achieving CUDA compatibility, a breakthrough accelerated by US export controls. In this episode, we'll break down this Trojan Horse strategy and what it signals for Nvidia's software moat and a potential split in global AI ecosystems. Third, a global helium shortage triggered by Middle East conflict threatens to shut down semiconductor production and disrupt the entire tech supply chain. We'll explore how this geopolitical crisis is now a critical tech vulnerability and what it means for chip fabs, hospitals, and scientific research worldwide. Fourth, CEOs of Coca-Cola and Walmart stepped down, admitting the coming AI transformation requires a new generation of leadership to navigate. So we'll discuss why this signals a profound shift in corporate leadership and what it means for boardrooms seeking a new AI CEO archetype. Fifth, Google sounds the alarm, warning a quantum computer could break all encryption by 2029, making store now, decrypt later a critical threat. Today, we'll take a closer look at this accelerated timeline and its implications for the trillion-dollar race to rebuild the foundations of digital security. The most unexpected news in the tech world today has to be Meta boosting its spending on a single AI data center in West Texas to a staggering $10 billion. The choice of El Paso, part of a region called the Borderplex, is no accident. Meta is securing an 80% property tax break for 35 years, highlighting a fierce competition between cities to become hubs in the new AI economy. In return, the area expects about 300 permanent jobs and up to 4,000 construction roles. To put that $10 billion figure in context, the original plan was for just $1.5 billion. This is a more than six-fold increase, a massive escalation in the AI arms race. The goal is a 1 gigawatt facility by 2028, part of a capital expenditure plan that could hit $135 billion this year. It's the physical expression of Meta's strategy to rewire its social media infrastructure for foundational AI. A 1 gigawatt facility, draws an almost unimaginable amount of power, enough to run a small city 24/7. This puts immense strain on the Texas power grid, ERCOT, which is already overwhelmed by requests from data centers. To offset this, Meta has pledged to help bring about 5,000 megawatts of clean power online and attempt to ease the strain even as its own demand skyrockets. This is where the situation takes a more complex turn. While Meta pours billions into infrastructure, it's also laying off hundreds of employees across Facebook, global operations, and even its virtual reality division. The so-called year of efficiency is clearly becoming a permanent model, freeing up cash for compute at the expense of headcount. But that's not the whole picture. Wall Street is watching with extreme scrutiny. Unlike rivals, Google, Amazon, and Microsoft, Meta doesn't have a massive cloud business to offset these colossal expenses. The company's stock is down 17% for the year, a clear signal of investor unease. The goal is to use this powerful custom AI engine to supercharge its own products, making ads on Facebook and Instagram more targeted to drive its core advertising revenue, which was nearly $60 billion in a single quarter. It's an internal investment to make their main moneymaker even more powerful. These massive data centers also face growing backlash over fears of water shortages and surging electricity costs. After a previous Meta project was linked to taps running dry in a Georgia county, the company is now promising water restoration projects and a new liquid-cooled closed-loop system for the Texas site. It's a sophisticated PR strategy designed to prevent the same kind of public outcry from happening again. So Meta is in a full sprint gamble, laying off staff to fund a $10 billion bet on AI, all while trying to manage intense pressure from Wall Street and local communities. The company is betting its future on winning the AI infrastructure arms race, not just by buying chips from Nvidia, but by designing its own custom MTIA chips. This is the great capital reallocation in action, shifting value from headcount to compute poured into concrete and copper in West Texas. Speaking of the AI arms race, a major power play is unfolding in the chip space. Huawei just unveiled a new AI chip that China's biggest tech companies who previously ignored Huawei's hardware, are now lining up to buy. This signals a direct challenge to the industry giant Nvidia. Recent US export controls had already pushed firms like Alibaba to stockpile Nvidia parts while experimenting with domestic hardware. Today's move flips that entire calculus. For years, Nvidia's dominance wasn't just about hardware. It was about its software fortress CUDA, the platform where almost all major AI models are built. This software created a moat that seemed impossible to cross. Previously, Huawei struggled to get private giants like ByteDance and Alibaba to adopt its semiconductors and its own software can, but those same US restrictions are now channeling demand directly to Huawei. What really brought this to a head was the next development. The twist is that Huawei's new chip is now highly compatible with Nvidia's own CUDA software. This is a massive strategic shift. Instead of forcing developers onto a new system, Huawei is building a bridge over Nvidia's moat, making it painless for developers to switch. It's a classic Trojan Horse strategy. Get customers hooked on the hardware first, then slowly migrate them to Huawei's own ecosystem over time. Huawei plans to ship approximately 750,000 of these new chips this year alone. While that's a huge step for China's domestic manufacturing, it's still a fraction of what a giant like TSMC produces for Nvidia. This shows both the scale of China's ambition and the real manufacturing bottlenecks it still faces. Mass production is set to begin next month, with a single card reportedly costing around $6,900. Interestingly enough, this isn't about paying a premium to buy local. Research suggests a server system with these new chips delivers nearly 3 times the performance of the restricted Nvidia H20 chip available in China, all at a competitive price. The previous blocker wasn't loyalty, it was the lack of a compelling CUDA-friendly alternative. This is all happening as Washington's restrictions have created a vacuum in China, one of the world's largest markets for AI chips. Huawei isn't just filling the void, it's using the opportunity to build a direct challenger. The US restrictions, designed to curb China's tech ambitions, may actually be accelerating the rise of a formidable domestic competitor. This could be the beginning of a great split in the AI world, potentially leading to 2 parallel incompatible ecosystems, one for China and one for the rest of the world. While Huawei and Nvidia battle over the future of AI, the entire semiconductor industry is facing a more fundamental threat. The production of your next smartphone could be in jeopardy, not because of chips or batteries, but a global shortage of helium. A new report reveals that the conflict in the Middle East is choking the supply of a gas critical for manufacturing semiconductors. Helium is almost impossible to replace in chip making. Its unique properties, extreme cold without freezing and total chemical inertness, are essential for cooling sensitive equipment and creating the pure environments needed for production. Qatar alone produces nearly 1/3 of the world's supply. With that supply chain under threat, the tech industry is scrambling. This isn't a technical issue, it's purely geopolitical, turning dependency on Qatar into a fragile single point of failure. Governments are now treating helium as a strategic national security asset. For instance, as the US sells off its federal helium reserve, China has been aggressively diversifying its sources, a sign of a high-stakes global chess game over a gas we normally associate with party balloons. According to supply chain expert Cameron Johnson, the shortage is an absolute concern. He warns that companies might have to start slowing production or ultimately shutting production down, making chips. Engineers are looking at alternatives like hydrogen and nitrogen, but it's not a simple swap. Hydrogen is flammable, a huge risk in a billion-dollar fab, and nitrogen just isn't as effective. Helium recycling systems exist but are too complex and expensive for a quick fix. The threat is immediate. Jerry Zhang, a sales head at the semiconductor firm VAT, confirmed the conflict has tightened supply and is already affecting production. The ripple effect is massive. If chip production stops, it will impact a huge range of consumer goods, from electronics to automobiles. And the impact goes far beyond your next phone. The hidden casualties are in our hospitals and research labs. A single MRI machine needs about 2,000 litres of liquid helium, and with prices soaring to $30 or even $50 per litre, some hospitals face huge operational costs. Even worse, particle accelerators and cryogenic labs are reportedly shutting down projects simply because they can't get the helium they need. This isn't just about convenience, it's about health and the future of scientific progress. That threat to the physical supply chain is creating huge headaches for tech. Interestingly enough, an even bigger disruption is happening in the C-suite. The CEOs of two of the world's most iconic brands, Coca-Cola and Walmart, just made a stunning admission about why they're stepping down. The reason is artificial intelligence. This isn't about technology replacing workers. It's about technology outpacing the vision of the leaders at the very top. After 9 years as CEO of Coca-Cola, James Quincy is handing over the reins, saying it was time for someone else on the field for the next wave of growth. He was direct, stating in a pre-Gen AI mode, we made a lot of progress. But now there's a huge new shift coming along. He believes Coke needs someone with the energy for a completely new enterprise transformation. For a company like Coca-Cola, this means a complete rewiring of the business, using AI to predict supply chain disruptions, invent new beverage formulas, and create hyper-personalized marketing. It's a massive undertaking, especially when one study shows a staggering 96% of retail executives have yet to see a tangible return on their AI investments. These comments echo what the former CEO of Walmart, Douglas McMillon, said just months ago. After a decade at the helm, McMillon explained he was handing the role over to someone faster. He admitted, with what's happening with AI, I could start this next big set of transformations with AI, but I couldn't finish. This is giving rise to a new AI CEO archetype. Boards are no longer just looking for MBAs. They're prioritizing leaders with backgrounds in engineering or data science. When we place Walmart's strategy alongside a tech-native company like Amazon, the different paths become clear. Walmart is partnering with Google and OpenAI to integrate AI. Amazon, meanwhile, is building its own proprietary AI from the ground up. Both are multi-billion-dollar bets, and they show why a legacy CEO might feel they aren't the right person to see that bet through. Let that sink in. These are the leaders of global titans in beverages and retail, and they're looking at the AI transformation and concluding that a new kind of leadership is required. The pressure is reshaping the entire corporate structure. A 2025 survey found AI expertise is now the fourth most desired attribute for new board members. The people who hire and fire the CEO are themselves scrambling to understand this new world. So we have CEOs stepping down because they can't see the finish line on the current AI transformation. Now, get this. At the same time, Google is warning about a future technology that could unravel the entire digital world as we know it. The company says a new kind of computer could break nearly all of our digital security by the year 2029. In a direct statement, Google warned that the encryption currently used to keep information secure, from banks to governments, could easily be broken by a large-scale quantum computer in coming years. While this is a critical public service announcement, it's also a strategic move. By creating this urgency, Google positions its own cloud and security services as the premier solution for the massive mandatory upgrade to post-quantum cryptography. A new standard the US government just finalized. However, if you zoom out, you'll see another layer of strategy at play. The most terrifying threat is a tactic called store now, decrypt later. Adversaries, likely nation states, are intercepting and stockpiling massive amounts of encrypted data right now. They can't read it today, but they're waiting for the day a quantum computer gives them the key. The US Government Accountability Office confirms this is happening as we speak. Your most sensitive information, classified documents, financial records, even your genetic data could be a ticking time bomb. The sheer scale of the problem is enormous. We're not just talking about updating websites. Think about the encryption embedded in satellites, medical devices, and the power grid. Experts are calling this a $1 trillion imperative. A recent Citi Institute report estimated a single quantum-enabled cyber attack on a major US bank could cause up to $3.3 trillion in economic damage. While most experts had placed the timeline for this kind of threat in the 2030s or even the 2050s, Google is publicly urging its teams to act now, adjusting for a 2029 doomsday scenario. A debate is raging among physicists about whether that date is realistic. Today's quantum computers are small, fragile, and noisy. Overcoming the engineering challenge of quantum error correction is so monumental that many believe the 2029 timeline is more about creating market urgency than it is about the laws of physics. Still, the warning is clear. Secrets from today could be exposed in the near future. It's a race with huge geopolitical stakes. In the US, the effort is led by private companies like Google and IBM. China, however, is taking a state-driven approach, pouring billions into government programs, while the US may lead in building the computers. China has already established a 1,200-mile quantum communication network that is theoretically unhackable, creating what some call a quantum encryption gap with major national security implications. According to Google, that clock is ticking faster than anyone thought.
That's it for today on Voyage Daily Tech. Follow, share, and stay tuned for daily updates coming your way tomorrow.